if you look at it also from a Philippine perspective, over the past 2 decades or so, it's OFW remittances, it's been the BPO sector. At some points, you also have the POGO being part of it, but part and parcel of that, we have a very large and young consumption-driven economy that's pushing it further. In this video, I want to talk about 10 things that investors need to look at. They want to invest in the Philippine economy. But not just that, since I'm sharing principles here, you could also interface this or superlace this if you're investing and looking at other countries as well. Principles are principles, and ideologies are something that, as you analyze the Philippines, you can also use that if you want to analyze Singapore, the US markets, or even Hong Kong, or even Indonesia, or Malaysia, and other countries as well. So if you're an investor wanting to look at it from a top-down approach and looking at it from an economic perspective, here are 10 things that you could look at as you start investing in the Philippine economy or other countries as well. Number one, look at economic growth. Look at the current state of the economy of the country that you're looking at, and look at historical growth patterns to determine the potential for future growth. And if you look at it also from a Philippine perspective, over the past 2 decades or so, it's OFW remittances, it's been the BPO sector. At some points, you also have the POGO being part of it, but part and parcel of that, we have a very large and young consumption-driven economy that's pushing it further. Number two, look at political stability. Consider the stability of the country's political system that you're trying to analyze, and look at the potential impact of political events in the country's economy. Number three is this: look at demographics. Look at the demographic trends in the Philippines, including population growth, age structure, urbanization, to understand the potential for consumer demand. And I think from a Philippine standpoint, what makes the Philippines very interesting is that we've entered a couple of years ago the demographic sweet spot, that we have a very young and vibrant population, and there's more people who are now earning as compared to people who are feeding off those that are actually earning. There's more people that are earning, but not just that, they're young and they have the capacity to actually earn more, and they have the capacity also to actually spend more. And that's why also, if you try to analyze other countries, like for example, say Japan, even China, one of the issues that they have right now is their population is very old and it's declining. That means also that their workforce will be hit in the decades to come, and if their workforce is also hit, that also means that consumption will also be hit as well. Number four is this: look at infrastructure. Consider the state of the country's infrastructure, including transportation, energy, communication networks, to determine the potential for economic growth. So every time I travel also, I like looking at infrastructure and connectivity of different countries, because I think a very good infrastructure helps boost tourism, because it's easy for tourists to travel in and out of the country. Railroads, airports, seaports, and even subway MRT systems, and even skyways, motorways, which allows cars to be interconnected as well. Also, aside from a touristic perspective, it will also impact people who are actually living in the country as well. If there's a large amount of time that they spend in traffic, it makes them more stressed, it makes them less productive. Time that could be spent to earn, spent also in traffic. So I think infrastructure is a very important part of how you analyze a certain country as well. Number five, look at the labor market. Look at labor force participation, unemployment rates. I've been tracking the unemployment market in the US also, because they have a very big impact on how their policymakers and also the Fed make decisions also on what they're supposed to do to bring the US economy forward. So unemployment rates are very important, wage growth, and all of these three things put together, the labor market, the workforce participation, unemployment rates, and wage growth, they're very nice to understand the potential for economic growth and consumer demand. As you all know, the Philippines is a consumption-driven economy. The more you know what drives that demand, the more you know what drives consumption, will help you decide further also which stocks would be very interesting to buy for the long term. Number six, and I think this is something that's very interesting, is look at foreign investment. Consider the level of foreign investment in the Philippine economy or any other country that you're trying to analyze, as well as the government's policy on foreign investment, to understand its potential for growth and stability as well. Having foreign investment will help boost and will help somehow scale up whatever plans they have to further grow the economy and move it from a developing economy into a more developed economy as well. So more foreign investment, especially on sectors where that's capital intensive. What foreign investments also bring is somehow also the expertise that they have in the country that they're coming from as well. And I think that also adds to the flavor of what will help grow the economy of the country as well. Number seven, monetary policy. Look at the Philippine Central Bank's monetary policy and its impact on inflation rate, inflation, and the current exchange rates. And if you notice it also how it has been swinging over the past few months, the Philippine peso up against the US dollar, we've seen it hit 60 and then they've raised interest rates and we've started to see more appreciation in the peso, and that's why as of now it's close to the 55 peso range once again. And see how they have been doing it also as inflation is higher. They have been raising interest rates to combat inflation as well. Number 8 is this, regulation. Consider the regulatory environment in the Philippines, including regulations related to business, finance, and investment to understand the potential for growth and stability. Number 9 is we're gonna look at competition. Look at the level of competition in the Philippine economy and the potential for new competitors to enter the market. So competition is good for consumers because they have more options. Competition also is good because it allows and creates a framework where if there's more people in a certain space, it will force businesses to become more competitive. It will force businesses to somehow do better and not just remain the same. It will force them to be better at marketing. It will force them to be better at their product. It will also force them to somehow make their customer service even better. And lastly, natural resources. Consider the availability and the potential of the country's natural resources such as minerals and agriculture to understand the potential for economic growth. It's also the ability to translate those natural resources into something that adds value to the economy as well, because if there's a lot of natural resources but it's not actually used, it's not tapped, or it's not efficiently made useful, then all of those natural resources would be of no good. So natural resources, but also the ability to convert those natural resources into something that adds value to the country. I highly suggest as a stock investor, it's very, very important to do your own research and due diligence when investing in a country, regardless if you're entering the route, you want to be in it as a stock investor, or you're getting into the bond market. But it's very, very important to take the time to research more about it, because at the end of the day, it's your money, it's your responsibility. And what's nice, if you've been following me over the past few years, one of the things that I've been banking on, at least for the Philippines, is its consumption-driven economy, which is also fueled by the BPO and also OFW remittances. And as long as those three pillars are intact, that gives you a sense that billions of dollars would be entering our economy, which makes it more sustainable over the next few years. And as long as the population is vibrant, strong, and they're spending and contributing to consumption, there's still a lot of potential as well. If you guys have any questions, put them down below and I'll do my best to make videos from the questions that you guys have sent out. And I hope that this video gives you as much insight on how you're supposed to analyze a country and an economy as well, especially if you're looking at it from a stock market investment standpoint. So that's it for now. This is Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.